Congratulations on making it to the final tutorial. In this guide, we're going to learn how to short the cryptocurrency market using a website called Poloniex. Now, this is an alternate way to short the market that's a lot different than a popular site called BitMEX. BitMEX gives you up to 100 times leverage to short Bitcoin, and I don't recommend using that site to do this. The reason why I like Poloniex is because we can use our Bitcoin to short altcoins, and historically altcoins have crashed far faster than Bitcoin. Also, Poloniex is going to limit our users to 2.5 times leverage, which means if the market goes 30% the opposite direction, you get wiped out. If you use 10 times leverage with BitMEX, you could get wiped out with a 10% move, which can happen intraday easily. If you were using 20 or 30 times leverage at BitMEX, you might get wiped out if your position just went 5% against you, which is completely insane. As always, there's a written PDF that you can save on your desktop and print out for reference. So to start out, I'd like to look at where we're going to do it and how it works, and then we'll switch back to our spreadsheet to talk about the different settings and how to account for it in our platform. So let's go to Poloniex. You can see I actually have a position that I entered a few weeks ago, and it has a unrealized profit. To close it, I just click that button and it will close it. But how did I get to this point? So you're going to need a Poloniex account. A quick little trick you need to know about is you're going to have to turn on your camera with Google Chrome by clicking that button. Go to Site Settings, and you need to allow the camera function. This really stops a lot of people from being able to get verified at Poloniex, and is just a simple little problem that even I had trying to figure out how to get my webcam to interact with Poloniex, because they will make you do a verification. Now, the first thing you'll do is go to Balances, Deposit, and Withdrawals. Find Bitcoin and click on Deposit. This will be the address. So the next step is going to be to send the Bitcoin that you want to use as collateral to short the altcoin markets. And so this can be done from Coinbase or from your Nano Ledger S, where you're going to send the coins to Poloniex. Be really careful. Perhaps consider doing a small test send before sending all your Bitcoin. This could represent a lot of money. And also, I highly recommend that you've done all the steps to secure your system so that you don't get hacked while you have such a large position sitting in an exchange. And it's, again, not the exchange that's the biggest risk. It's really your identity being stolen that is the biggest threat. So if someone manages to either port your phone number by calling AT&T or whichever service, pretending to be you, getting that phone number switched over to themselves, to their phone, that's one way they can kind of hack into your system. Or if they're able to break into your email account. Typically they end up taking over both of those accounts, then they can take control of your exchange accounts, and then they just take the money and send it to themselves, and there's no getting it back after that. So first we make a deposit. That will take a little bit of time, probably 30 to 60 minutes for Bitcoin. Then we can go to transfer balances, and it'll start off right here in the exchange. So we're going to want to transfer the Bitcoin from the exchange to margin. Click transfer, and now it will put the money in your margin account. From the margin account, we now have these different tabs of coins we can use to either go long or short with leverage each of these different altcoins. Now our strategy is the same. We're building short positions based on the 30-day trading volume. If a coin has very little trading volume, that means it can be manipulated very easily with very little volume. So I don't want to have a big position in a coin that's hardly traded. So we're using the same logic to build our positions. If I scroll down, I can get the real-time prices. I can get the amount of coins I need to short sell right into here. The loan rate, this is a daily loan rate, but the rates for borrowing Bitcoin are a lot lower than that. if you click on the lending tab, you can actually see what the market is. And you can see people are willing to loan Bitcoin at 0.006% per day. So it's very, very cheap to borrow money. And depending on which setting you're using, you may not actually have to borrow any money to pull this off. Okay, so now if I go to this tab, I can look at my open positions. Let's just say I wanted to close that. And I've just closed that position. And now I have some new Bitcoin that I can use to re-enter a trade. And so that's just how simple it is to use Poloniex to short. So let's go ahead and flip back to our spreadsheet and see how the two will interact with one another. All right, I'm switching back to the portfolio software so that we can start digging into how to use these four tabs: the short position manager, the short money manager, the selling short, and the buying back. And again, this is all in written format. If you download the PDF below, what's important to know is that all of your profits and losses, closed and open, will automatically reflect to your overall position manager. And the changes in your Bitcoin position from buying and selling these different short positions over at Poloniex will automatically flow into this cell right here, C5. Now this is only going to account for closed positions. And so in a moment, you're going to see the accounting tricks we do to pull that off. But if I scroll over here, you can see it knows I have 1 Bitcoin potentially to use for shorting cryptocurrencies. And right now you can see it's looking for a negative 250% target size. Now, if I add up these positions below, you can see that equals a total sum of 250%. So we actually want to have negative Bitcoin, which means we'll be borrowing from Poloniex, using our Bitcoin as collateral to build a larger position. And why would we want to do that? Well, think about it. If Bitcoin is what's being used to short these other coins, we're fighting a falling Bitcoin price to generate a profit. So we need the altcoins to fall faster than Bitcoin to make a profit. And if we're using leverage, that also helps create a larger profit. Now, you don't necessarily need to use leverage to help hedge your portfolio and reduce risk. So let's see what happens if I switch it to the conservative setting. You can see it's dropped. Now I do need to update. And you can see it's dropped these target sizes to add up to 100%. So in this system, I'm not having to borrow any money to short the markets. Now here's the most important thing to know. If you're on the conservative setting, you can withstand 100% loss on your altcoins, and that's when you would get a margin call. Poloniex is going to have to sell your position to buy back the altcoins you shorted. If we're on the aggressive setting, we'll be using 150% of our Bitcoin position, which means we are using some leverage. And now we can only withstand about a 60% loss before Poloniex will be forced to do a margin call. When a margin call happens, you either have to add more money to your Poloniex account, or they're going to close your positions and you're going to lose the total amount of Bitcoin in your margin account. Now, if you do have your long portfolio running against your short portfolio, what's going to happen? You're probably going to make a larger profit, especially if you're in something like the super aggressive setting, than you're losing in your short portfolio. So you would be able to sell some coins from your other portfolio, your long portfolio, and then add it to this so you don't get a margin call. And if you're a swing trader and you're trying to predict market direction and you only are short, well, then you're going to have nothing to sell to replace these funds. So you shouldn't be all in going short on the market. And as you'll see, the most I'll go short on the market is with around 50% of my portfolio in my swing trading account. And that's because I know if I'm wrong, I'll have money left over to continue trading with. Now if I go all the way up to the super aggressive setting, I'm only going to be able to withstand about a 30% loss before I get a margin call. So in general, I like to be very careful about shorting the market. I'm doing it for most of my model portfolios to reduce volatility, not to create a large profit. In my swing trading portfolio, which I only have one of to be fair, that's where I'm trying to predict market action, and I'm only long or short. I'm not doing a long and short portfolio. Okay, so that's kind of the primer on what the three settings are. Unlike the long portfolio where those settings reduce how big our Bitcoin and Ethereum position is, this is only altering the leverage. So we're still looking at the 30-day trading volume to decide what chunk of our money should short which coins. And this really relies that altcoins crash harder than Bitcoin and that we don't have some sort of inverse relationship where Bitcoin crashes and altcoins go up. Okay, so let's start looking at how we would actually start placing some trades. So it's important to understand what's actually going on. When we're short selling, let's say Ethereum, we're doing the selling today and we're going to have to buy it later. So it's kind of like flipping the trade upside down. And so that makes for some pretty tricky accounting work, but we've simplified it here at Portfolio Builder, and I hope this will be very easy for you to remember. So I'm going to enter one trade, and let's go ahead and use the maximum leverage just to illustrate probably the most complex setup, which would be the super aggressive short position. So this is saying I should short 55 Ethereum and I should spend negative 1.7 Bitcoin. Okay, so I'll go ahead and copy that. Number of altcoins short sold, 55. The Bitcoin cost, now let's look over at Poloniex. If I wanted to sell 55 Ethereum, it's going to quote the price right here and tell me my cost. So I would actually get the price from here. And also it's important to note that the loan rate will be automatically assigned to you at the lowest rate possible. So if you go look over there, no one's leasing Bitcoin for 2% a day right now. Now when the market goes way higher, that may go up higher. But right now, while prices are low, the interest rates are very affordable. So let's go ahead and continue filling out the trade. Again, you would put the price in from their platform, but you have to add a negative right here. Now they're actually accounting for this the opposite way I am by calling this a negative position right here. But it really doesn't make a difference. And as you'll see, the way we've done it makes it very convenient for you as a user. Now they're going to be quoting all this stuff in Bitcoins. What did this cost at a rate per Bitcoin? But that just doesn't make sense to most people because the value of a Bitcoin has dramatically changed over time. And so we don't know what a 0.025 Bitcoin is really worth. So we actually have you look up at the time of your sale the real price of the altcoin you've sold, which is $204 in this case on Ethereum currently. And when I first enter this trade, it's a negative Bitcoin position. Okay, so let's go ahead. The value of Bitcoin in this portfolio is all purchased at 6,500, and we've done all of these trades in a single day. These columns are not necessary to manage your positions, but again, healthy for keeping track of your tax obligations. Okay, so we've entered the first trade. Let's go ahead and trigger an update and see what it looks like. Okay, we can see that we now have the Ethereum position filled. We have 55 short altcoin Ethereum position. We're negative 0.65, so we've already spent more Bitcoin than we have. So we're using some leverage, and we've reached 162% of our position size. The maximum we can use is 250, and so the rest of the coins would be filled out identically to get these remaining positions. So what's happened? If we go back to the main money manager, it will recognize the real-time profit loss that's occurring in that open position right here in the current value. But it still thinks we have 1 Bitcoin. Okay, so it's not going to change that until I close my position. So let's go back over to here, where we can see we have this position. Let's say we've changed our mind and now we really don't want to be short. So I'm going to show you how to close a position. Now, for those of you who like to take partial profits, this is really not designed well to do that. And as you saw at Poloniex, it's really designed to close the entire position in a single trade. And I really recommend that you do that. If you do think you might want to close half your profit or loss and then close the next half later on, your best bet is to do 2 entries in the beginning so you have 2 to close out, because we're going to have to exactly match the order from the selling short to the buying back. So let's say we wanted to buy this back, and let's just say the price was going up today. So we went short 55. We need to buy those back. Let's say the price had suddenly jumped to $225. Now this is going to cost more Bitcoin than we originally paid for it. So you're going to see we're going to end up losing money on this trade. And because I'm making a hypothetical trade, I just have to kind of guesstimate. Let's just say Bitcoin went up to a little higher to 6,600. And now what we have to do is, to close this trade, I have to delete the negative sign. And that's the last step. So if I made a profit, I would have bought back this Ethereum position for less than I paid for it, for less than I sold it for. So I sold it for 1.7 Bitcoin, but I had to buy it back for 1.87, so I had a loss. And this is the original price I paid for it. So you can see in just a mere few minutes, I could have lost $825 on that trade. Now, if the opposite had happened, let's say it started crashing dramatically, I want to take a quick profit, and let's say that Bitcoin had crashed slightly during that period too. So let's say it went down to 6,200. Now I've created a profit. So I bought the position for 1.3 Bitcoin, but I was able to sell it for 1.7. So again, when I enter these trades, this must be negative. When I close it by buying it back, the last step is to go and delete the negative sign. Now let's go all the way back to our position manager. And you can see the position has grown in size. It's automatically reflecting the difference. And if I come over here, I can see that I had a closed profit of $2,790. And what do you know? Now my potential Bitcoin to use for shorting has increased. So this would force me to rebalance. Now, the short portfolio is really designed to have a swing trading like feature. We see the market go up considerably. We build a short position to try to secure some of our profits. And that's the way you'll see me use the short portfolio in my model portfolios for the most part. I have one portfolio where I am only going long or only going short, in which case you'll see me trying to try to beat the market and outsmart it, which you'll notice if you watch my videos I'm not a huge fan of. But I know that is a feature that most of our members would like to do, is get that short-term price action prediction going on. So there you go. That's into this tutorial. The process to buy and sell the rest of these positions is exactly the same, and everything ties into your long portfolio. So thanks for your time. I hope you'll schedule a coaching call and get to know our coaching team and be a very happy portfolio builder member for a very long time. Thanks again, and looking forward to your feedback.